And that's something else I work with clients on is you need to raise your fees. And a lot of times people are scared because they're like, people aren't saying no to me. So let me, everybody's coming to me. Nobody says no. And at some point, somebody needs to say no, or else you're not charging enough.
Well, hello and welcome to the J. Sterling Hughes Show, where we share how we have built our family law firm from 0 to 25 attorneys and over $15 million in revenue over the past 10 years. And my purpose here is to document what's working and what's not working with hopes that you can take that and you can recontextualize that in your practice and shorten your success curve. And I have a special guest today. Leah Miller is with me, and we're going to talk about firm financials. And I know so many people, including myself, kind of like eyes roll back in the head because it's like details that we don't want to deal with, but they're obviously super important. Your money and your income is your oxygen of your law firm. And I have felt that in very acute ways over the past 10 years as we've built our practice. So Leah began as a paralegal. So she was a paralegal for 13 years. And I don't know about your firm, but in our firm, the paralegals know everything, including way more than the attorneys know, usually about the law, a lot of times about the law, but certainly about what goes on within the law practice. So she has that depth of experience that she came out of, and then went and got an MBA, became a CFO, and started her firm. And she serves law firms with fractional CFO services, as well as some bookkeeping services as well. And real quickly, before I turn over to you and ask for your story, like I said in my intro here, we were 10 years old, and without question, the biggest miss for me when it came to hiring was not getting some financial help in the very, very beginning. We had a bookkeeper and she's fantastic, but we didn't have any forecasting. We weren't getting, anything close to financials that we needed. And if you knew how we ran our firm, like on an Excel sheet for well past 10 million, and I'm not exaggerating on that, you would just be blown away. Now we had QuickBooks, but outside of that, it was just basically Band-Aids and bubble gum for us for the longest time. So today we have a fractional CFO today. So I'm a huge believer in your services and what you offer. So I'm excited to have you on the show. So I'll quit droning on, and I'd love to hear a little bit about the Leah Miller story.
So it's great to be here. Thanks for having me. And what you just explained about your firm is more common than you probably realize in law firms, and I see it all the time. It's definitely common, but it doesn't have to be. So, like you said, my name is Leah Miller. I started out as a paralegal, and my goal in life was to manage a law firm one day. That's what I really wanted to do. Early on, I had a manager that wasn't the best, and I was like, I could do that better. So that was my goal one day. I thought I would be older when it happened because I was going to work my way up through right time, right place, and a lot of hard work. I was promoted to firm administrator of the personal injury law firm I worked for when I was 26. Our admin left. I looked at my boss. I said, I can manage your law firm. And he said, can you? And I said, yeah. And so he's like, all right, let's do it. And I will be forever grateful for him. So I got a crash course in QuickBooks, how to run payroll, and what needed to be done. And so that's how I began my journey as the firm administrator. And I was still our main litigation paralegal. I was there for over 12 years and worked my way up. My title changed to CFO because I went and got my MBA. And I really was running the entire law firm. So like you said, paralegals know everything that's going on. And I like to joke I could work a personal injury case from beginning to end if I had Esquire after my name. And I loved it. I loved being in the law firm industry. Never really thought I would leave. But like I said, I achieved that goal a lot earlier in life than I thought I was going to. September 2022, our area was hit by a hurricane and our office flooded. And so we had to purchase a new office, and it moved. And we were my commute was an hour.
Oh, wow.
And so that became a problem. I have 3 kids. Obviously, it's really hard to commute an hour and, with 3 kids. And so in January of 2023, I started doing some consulting and bookkeeping on the side for a friend that had a landscape company and also a local attorney that was a friend. I started doing some of her bookkeeping. And I realized there's such a need for law firm owners to have more financial help. And so I started growing this side business. Still did not think I was ever going to leave my full-time job.
Commuting every day at this point?
I was. Yeah,
Oh, wow.
January to May, I was doing the commute, and my bosses were trying to be flexible. I was getting to the office a little later, leaving a little earlier, but I was also managing the office. And so it's hard to manage people if I'm not there. Like I couldn't work from home. And so in May of 2023, I made the decision to leave my full-time job. I'd been growing my business. And I left that job and took the leap of faith to do full-time with my business from home. And so, like you said, I do fractional CFO and bookkeeping for law firm owners. And I now have 2 bookkeepers that work for me. So I don't do a whole lot of the bookkeeping anymore. I just oversee that. And then I work directly with my one-on-one CFO consulting clients.
So starting a little simple for me, okay? What is the difference between a CFO, a controller, and a bookkeeper, an accountant? I know they all have different titles and different functions, but explain what that is.
So this is my favorite thing to talk about because I hear all the time, I have a CPA or I need a CPA. And so CPAs, they're going to prepare your taxes. They're looking backwards, they're doing your taxes. A lot of times people hire CPAs and they think that their CPA is going to see something in their financials and be like, hey, I think you need to change the way you do this. But they're not. They're doing your taxes. They're super busy. They work crazy hours. And so that's what they're there for. Bookkeeper also looks backwards. And so they're categorizing your transactions. Sometimes people pay their CPA office to do the bookkeeping, but it can be a completely separate thing that you do. And so bookkeeping is going to categorize all of those transactions into QuickBooks, keep you organized in that way, help with your invoicing, AR, AP, things like that. A really good bookkeeper.
AR, accounts receivable, AP, accounts payable, right? Okay.
Yeah. Accounts receivable, accounts payable.
I've learned these over the last few years. I'm not like super genius in this stuff. I just want to make sure everyone knows what we're talking about here.
Yeah. So a really good bookkeeper, and what we do with my firm and what a lot of bookkeeping firms are doing now that's different from the past, is we're not just categorizing your transactions for tax purposes. We're categorizing your transactions so that you can pull reports and make financial decisions for your firm. So even my smaller just bookkeeping clients that aren't to the point of needing a fractional CFO, we do their bookkeeping in a way so they can pull those reports from QuickBooks and look at them and make some decisions. So for example, a big one is wages. For your CPA, for tax purposes, you can lump everything into one category of wages. All of your associate attorneys, paralegals, legal assistants, whatever they may be. I like to break that out where we have, associate attorneys broken out, owner's wages broken out, and then support staff. So you can see how much you're spending on each of those categories, and then that can help you make some decisions. So if you're overstaffed, then there may be a process issue or an operations issue. So if you're overstaffed and your staff is overworked, then you need to look at, are there processes we can change? It's not always a money issue. So that's bookkeeping, looking backwards, categorizing transactions, and organizing your financial data.
Okay.
A CFO is going to look forward. So a CFO is going to talk about strategy for the future, budgets, cash flow forecast, helping you make decisions for your firm into the future. So do you need to hire another associate? What is that going to look like for your cash flow? What does that need to look like? How much additional revenue are you going to have to generate to help sustain that new hire? And so that's what a fractional CFO does. And a fractional CFO is somebody that you hire on a fractional basis, on a consulting basis. So they're not full-time with your firm. They're a contractor. And generally you meet once or twice a month. They get into your financials and you help, they help you make those decisions, financial decisions.
So if you can, put some detail around that in terms of the fractional component of it, Leah. So how many hours would a firm of X size, and then as that firm grows, how many hours would they typically need of a CFO's time on a monthly basis?
So it's really not a lot, maybe 5-10 hours a month sort of thing, depending on what you need. I know for my clients, we do a 1 hour once a month deep dive into the financials where we really look at last month, what's coming up, and all of that. And then we also meet every other week if needed to just kind of check in.
I'm sorry, what is the need then based on? Is it based off of, do you peg it to revenue? Do you peg it to issues in the firm? Like I'm like, if you have a $3 million firm, how much time would that person need CFO versus an $8 million firm or a $1 million firm? You see what I'm going with that? I'm just trying to get a feel for how much time is required for different size firms.
So there's not a whole lot of different time that's required for different size firms. Especially between the $1 million and $10 million range, which is what typically what I work with. And so they all, take about the same amount of time. What I look at and what I try to do for my clients is we look at goals. And so these firms, what they need is to be growth. They're looking for growth. They're not just status quo. If you're hiring somebody like a fractional CFO, you need to be, I want to grow. What are my goals? And so we really set the goals and look at what those are. And that's what we work on, monthly in the meetings is the goals.
I see. Okay. But how much of your work is in analysis for contingencies? Like if we did this is what you would need. If we went to this office and opened up here, you would need this. How much of your work's in that area?
So a lot of it is in that area, and it's figuring out, how many clients do we need to see in a month to reach this goal? Are we there? If not, let's talk to our staff and kind of lay out that roadmap. That's something I do a lot of is it's eye-opening for people. They'll tell me, I want to make $1 million this year. Well, how do we break that $1 million down? How do we get to that $1 million? Let's look at what's your average per client. How many clients do you need in a month? If you need 40 clients in a month and you're only seeing 20, then we need to look at spending the additional money on the advertising to get in get those clients in. Are we getting the leads but not closing them? That's when you get into some of those issues when you see that you're not, closing enough clients in a month.
So your sweet spot, I'm trying to triangulate here, is 1 to 10 million for a law firm, top line revenue, and to be growth minded. So they're needing strategy, they're needing analysis to kind of fuel that growth and decide where they're going to allocate their resources.
Absolutely. For this fractional CFO services, that's about it. And a lot of times, people think they need to have an issue or a cash flow issue, because a lot of time we talk about cash flow, to hire a fractional CFO, but that's not always the case. So I work with
they
clients.
They need you before the cash flow issue.
I have clients who they have no issue bringing in the cash. They're doing good. Their net profit is really high, but they're not spending enough money to reach that growth they want to reach. And so I have clients that are very conservative, and I'm telling them, you're not spending enough money on the marketing. You will not reach your goal if you don't invest some money back into the business. I also have to tell clients to pull money out for themselves. They're working and they're really scared because when you first start your business, you kind of hoard some money because you're afraid that you're not going to be able to make payroll or pay yourself. And so you get to a point, especially when you get, into those multiple millions of dollars, where you actually can take money out of the business and enjoy it. And so sometimes I have to tell clients, I just told one last week, I was like, hey, you can take some money. She was like, whoa, really? I didn't expect you to tell me that today. So.
Well, very often lawyers they pay themselves last. I mean, they're working hard. They want to keep their firm going. They don't want that situation where they're having to dip into savings to put money back into the firm. So I see that a fair amount, including in our own practice. When you start a new relationship with a law firm and you come in, I imagine a lot of times that you're having to spend the first couple of months just kind of getting your hand around the metrics, even getting them to start measuring certain important metrics, like how much is a client worth? How much does our average client bring in? How many clients do you need to get this level of revenue and that sort of stuff? Can you just talk a little bit to that and what you've seen and what some best practices are there?
Yeah. So whenever I work with clients, I begin with, what are your goals? Let's talk about your goals and what we're actually working towards, because saying you want to make $5 million in a year means nothing if it's not tied to some kind of goal. So we definitely set down those goals and talk about that. And then we do talk about the metrics and the data. And so it's about 50-50, the people who are tracking that data. But the biggest thing is you need to be tracking, leads that are coming in, what are actually being converted, time it takes to work a case all the way through, to completion. You do family law, so how long is that taking? Or is this stuff that's dragging out? How long does it take till we get paid? So you want to track all of that. And then average value per client. So what's your value what are you charging clients? And then you can use all that data to do cash flow forecasts. So you can forecast out, we know we're making $5,000 per client, so we need to see this many clients in a month, and we anticipate having that. Something else you can do, especially in, I see this a lot in family law and estate planning, is when you're charging a flat fee you want to make sure that you're charging enough. And so you need to track that data and you need to track, how much time it's taking for you to help your clients. Because
that's so hard though, Leah. It is so hard to do that accurately. On the tracking the time thing, I have wrestled with this issue for so long. Here's the problem with that is that everybody ends up guessing anyway at the end of the month. So your data's corrupt and you end up making decisions off of poor data. I have just found that is just a non-starter. It's so hard to do that, especially as your firm scales. Half the attorneys will do it. Half of them won't. I hate it. So, and I was the hate it guy, so.
It is hard. And I do fight with clients on that, but you have
I'm on
to
their
have
side
a way,
on this one, by the way.
You have to have a way to determine, do you need to raise your fees? And that's something else I work with clients on is you need to raise your fees. And a lot of times people are scared because they're like, people aren't saying no to me. So let me, everybody's coming to me. Nobody says no. And at some point somebody needs to say no or else you're not charging enough. And so it's scary to raise fees, but that's one of the ways that you're going to increase revenue is raising your fees.
Yeah, we're doing that analysis right now, honestly. I try really hard though. This is where I take a contrarian view to what you're talking about. I don't think it's good to peg value off of time.
No.
I think you do your best to peg it off of results. And so that's another argument against not keeping time in my world is that, look, if we're able to get a complicated divorce over in 10 grand and the hourly person is going to charge you 30 grand, we're delivering a huge amount of value. Let's raise our rates on that is how I would look at that rather than like, how many hours did you lawyer put into this case? Therefore multiply that by your hourly rate. And that's what it should be. I think that's the wrong way to go about it. What do you think?
I agree with you completely. I think it needs to be value-based. And I was having this conversation today about how you need to charge for your value, but at the same time, you need to make sure you're valuing yourself enough. And so I find people undervalue the work they do. And so that's why you can use the time as a metric to make sure that you are not losing money and then, increase from there. But you definitely need to charge the value of what you're doing. But at the same time, even if, if you're a solo, then maybe the time isn't as important. But if you have 4 paralegals working on something and they're not helping somebody else and they're wasting too much time, then you maybe have, that goes back to that process and that operations issue. Yeah, so it just helps to, kind of track those things as well.
You're totally right about that. If there's probably the biggest problem we've had with fixed fee since we adopted it almost 8 years ago was that our lawyers super care about clients. They really get into their cases and they get their stories, they feel their pain, and then when it comes time to charging them for that next stage of their case, they'll just back off and give excuses why they shouldn't do that because they care so deeply about the client. So they'll work against their own interest in order to perceive in their perception, to do what's right for the client. So it's a really delicate thing. I get that.
It is, and that's maybe when you start undervaluing yourself. But there's only, you can care for the clients and want to help the clients, but there's only, at some point there's the balance of money there. Like there has to be. That's why you're in business.
Yeah, right. Yeah, for sure. So cash or accrual? That's a weird question, I know, but what are you seeing? What do you recommend? I mean, let me give you some context on this question. We have been cash up until about 2 years ago. Then we've been on blended cash and accrual for the past 2 years. And we're going to a mostly cash or mostly accrual, tiny bit of blended in there with cash. So it seems like there's no great answer to that question. So I thought you as CFO may have a strongly held opinion on that. So cash versus accrual for law firms.
So
maybe it changes by the practice type.
Most law firms I see are cash.
Okay.
From an accounting standpoint. At the same time, my clients that are billing hourly and invoicing, we're going to look at the financials on an accrual basis to look at productivity. But we also look at cash because if there's a cash flow issue, then I'm not so worried about how much you billed last month if you can't even collect it. And so it's a hybrid. Most of them for tax purposes are on cash. Personal injury, cash, because it just the nature of it. But I will look at accrual sometimes. It makes sense as they get as large as like your firm is to start looking at that a little bit differently because I would guess, you're not so worried about the cash flow of, a couple $1,000s as a small firm who is, like cash flow is definitely a bigger thing when you're first starting out. So definitely a hybrid. It depends kind of answer.
We get paid up front for most of our cases. So you got to the point where it was so hard you'd have 1 month where you'd make money, great money. Next month you lose a lot of money. So it's just like, so we end up spreading that out with accrual, and it's worked a lot better for us to get a good feel in the performance of the firm.
Yeah. And I have a client who is notoriously depositing checks into the next month for the month before. And so when I'm preparing financials for us to review, I am preparing them based on like what was earned, knowing that, she went to the bank 5 days late and deposited money.
Yeah.
That's not a great practice either, but.
Yeah, I see why she would do it though. I feel her there for sure why she would do that, just to keep it smooth, right? You don't want to be so lumpy. Cash lumpy. Yeah. We have back when we used to pay lawyers a certain way, paid them on collections, and the collection was counted when the actual matter concluded. So they would delay closing out files till the next month to make sure those collections stayed even across the board, rather than getting the money a month ahead of time, which I get it, totally get it. So yeah, I see that a lot.
Yeah, I deal with a lot of cash flow. Like a lot of my clients that I work with, we're talking about cash flow first. And so, like I said, I'm not so worried about what you billed last month if you're not actually collecting any of that, because we're, running into these cash flow issues. So cash is definitely a big thing, especially in those smaller firms. Yeah.
So make the argument for me why a firm needs a CFO versus just letting their bookkeeper do all that work.
So like I said, if you are expecting your CPA to reach out to you and be proactive with your financials, chances are that's not going to happen. And your bookkeeper is looking at the past. So they're going to run reports talking to you about what happened in the past. If you are growth minded and you are getting ready to, you have to do a lot of hiring when you're first growing. And so your percentage of your wages compared to your revenue is going to increase drastically, as well as your marketing. That's going to increase drastically. But there needs to be a balance there to make sure that your revenue is increasing. So having a CFO there to project that out and give you the confidence that it's going to work or it could work. I don't tell you this is for sure going to happen, but it gives you confidence and like kind of a peace of knowing like this extra spending is going to work out. And then it also is helpful to have that CFO who is watching your cash flow, because especially for, if you have a really good month, and I work with some contingency fee firms where it's feast or famine. You have a month where you've made $700,000 and you have a month where you've made $30,000. The $700,000 month, you can't pull $500,000 out because you had a good month. You need that money for the next month. So
let me add one thing to your list there. And you touched on this because I know there's other law firm leaders out there building their firm had to have my mentality around this, but you know why I think we really missed the ball on not having a CFO, fractional CFO very early on, is that me and my partner, both of us, we're very aggressive. We have a rose-colored view of the world. We think we can make everything work in the moment. We'll just muscle through and fight till we get it. And having that CFO, for example, and say, no, that will not work. This is how the numbers actually work out if you follow the math, rather than us getting into that month and then having to figure it out in the moment. So that extra set of eyes, that check on us and our mentality was, would have been real helpful.
The fractional CFO is that outside person that does not have the emotional attachment to your money that you do. On both sides, either you're spending too much or you're not spending enough. And so we're able to see from the outside of, hey, maybe we need to pull back a little bit. And then that gives you the peace of mind and the confidence that you're doing the right thing. So, law firm owners, when you first start your firm, it's you, and you're just hustling to make your own pay. And then as you continue to grow, you're responsible for other people and other people's salaries. And so there becomes a greater weight to the finances as you grow. And just having that person that can be the voice of reason or agree with you or show you a different way that's when you have the confidence as a law firm owner to really make those decisions, and it frees up your capacity to do other things as well. And so that's a lot of times what I am is I'm a sounding board. I'm a person, a voice of reason, for all of those firm owners.
Yeah. Can we talk about ratios? I don't really know how to ask these questions, but a couple of years ago, when we first hired our fractional CFO, he started to expose us to the idea of gross margin, which I had no idea what it was until he told us about it. And then ratios of where expenses and profits should be in a firm. So do you have a playbook or something, how when you evaluate a firm, when you give them targets, financial targets of where they need to be on the different buckets of revenue and the different buckets of expenses?
So the way that I come about this, because I get this question a lot of, okay, where should I be? How much should I spend on, marketing? And there are benchmarks. So, you want to be around 30% or 40% for wages sometimes. And, you're marketing 10 to 15%, although there's people that say you should go up to 20 or 30% on marketing. So there's a lot of different thoughts. My opinion on it is it depends on your firm, because every firm has different goals. So I have a client, her goal is to work less hours, but make a certain amount of money. And so she has to hire other attorneys to help generate that revenue. So she's going to spend a little bit more on wages because of that, based on, compared to her revenue. Whereas I have other clients who want to work the same amount. They still want to practice law. And so, their wages might not be as high because they're not hiring, a litigation attorney. So it really depends on the goals. And I also like to look at them from, a historical standpoint. So today, if we're looking at your financials and 50% of your current revenue is going towards wages, that's high. But you might be in a place where you have a lot of new cases coming in because you've spent a lot of money on marketing. And so you need the people to handle those cases. And you're going to see the revenue go way up in 6 months, 4 months, whatever it may be, to balance out that 50%. So if we're looking at it today or a year from now and your wages are still 50%, then there's a problem. And we need to talk about that problem. But if you're in that growth, then it's going to go up and down a little bit. And we just need to, that's the positives of meeting with a fractional CFO monthly, to make sure that we're aware of what those ratios look like and we're doing something to make them better.
Yeah. So like in the family, and I get it, your answer is the right answer for my question, but let me see if I can uncover some guidance here from you. This is the selfish part of the podcasting here. So for a family law firm, what's the right ratio for like cost of goods sold, or call that labor, and things that would fall into that bucket traditionally? Do you have like a sense for
about 35% is what I would say for that, not knowing anything about it? That's a good kind of, up to 40%. It also depends on if you're counting owner's pay in that, because some people have it all lumped together. So obviously it's going to be higher if you're an S corp or corporation and you have owners on payroll. So then, we're getting closer to like the 40%. And then you're looking at like 30% for expenses. And that can change also depending on what kind of office you have. A lot of people are virtual now, and so they can keep their expenses really low. So, that's kind of looking at that as well. And then we want to shoot for a 20% profit, Yeah.
What about from the marketing side? What are you seeing?
I'm seeing people, a lot of times when I first pull the numbers, they're not spending enough. They're spending, 5%. A lot of people are pulling out of the like Google pay-per-click kind of game, just because like that's getting very expensive. People are also pulling out of, the traditional marketing of like TV and radio, smaller firms that I work with. They're pulling out of a lot of that because they just can't compete with the big firms that are spending the money on it. So a lot of times I'll see people spending 5-6% on marketing. And so I'm like, let's get that up to like 10%. Like, let's get that up, some more, because we need to increase that.
All right, I'm gonna put you on the spot here. I didn't prep you for this, but you'll have the answer. I know it. I have confidence. So you're a family law firm leader. and you have a business card, and the only metrics you can track have to go on that business card. What are the most important metrics to put on there? Both metrics for performance and financials. What do you put on there?
I want to know your average client value.
Lifetime value?
Average client value, right? Is that what I said?
Yeah.
Okay.
I'll look at it in
case
lifetime
value.
Okay, case
value.
Okay.
Some people say client, like it's
well, some
case
say clients have recurring issues. And
average case value. Average
like
case
in family
value.
law, we want a one-time client, but some of our clients they come back again and again because they're in hard situations. So
I would say average case
question.
average case value, as well as how much time it's taking from the time you are bringing that client in to conclusion, especially because you're getting paid ahead of time. So like that's April's revenue, but you don't want to be working on them again, like, April next year. You want to make sure like it's getting done. And I know in family law, it's a little bit hard because you're at the mercy of the court and another party, but you want to make sure like you're continually moving that. And then I think the biggest thing, especially when we're talking about marketing money, is how many leads you're getting and how many of those leads are good and like which ones are being signed. And so that's a really important one as well. If you are a family law firm not doing flat fee billing, then I want to look at your collection rate of your invoices. So how long is it taking for you to send an invoice out and get that money in?
Okay.
Every law firm should be accepting electronic payments. You should not be waiting for a check to be mailed to you. Yes, there are fees.
You have to say that nowadays? Are you really going there? So that means you must see this.
Yes.
Oh my, okay.
Yes, there are fees. Those fees are a part of doing business. You want your clients to pay you right away. That's just a part of doing business. And so if you are billing, invoicing, and getting paid after the fact or monthly or whatever it may be, I want you to track how long it's taking from the time the invoice is sent to the money is in your account.
So I've got you at on this hypothetical card. I've got you at the average case value, days to conclude, so start to finish, and then if you're hourly, then your collection rate. Like what you're billing and collecting. What else do you have on that little card? You're running out of room, Leah.
I like to look at run rate. So a lot of people don't look at run rate, but as you're growing, it's a fun metric to look at. So that is if you take your last 3 months of revenue and multiply that at 4 to see what your yearly could be, and see what that is every month and see if that is increasing. So if your run rate's, $1 million. So like
a growth question, a growth metric to see how fast you're growing. Okay.
Yeah. And so that's a fun one to look at, because if you continue to have the 3 months that you just had, this is what you could get. And so it kind of
metric too, I guess.
Well, revenue definitely is a vanity metric, but if we're talking about growing, I like to see that so that, so that's one of my big ones, one of my KPIs that I like. It brings about some moments for clients because then they can kind of visualize the work that happened the last 3 months and what that, looked like for the business and what the possibilities could be. Or if you slacked off like you did the last 3 months, or your team was not efficient, then you're not going to hit the $1 million that you thought you were going to hit, because you're at $500,000 run rate.
Yeah. Good. Anything else on that card?
I think that's it. Net profit, like I just said. Revenue.
That's kind of, we kind of take that for granted.
Revenue.
No table stakes. I should have called that on you to begin with. How much are you actually making?
Revenue is a vanity number. You need to know your net profit.
Capture that a little bit in there.
Yeah.
So,
okay. Net profit is what you need to know. And so people are like, I have $1 million firm. And that means nothing if your firm is spending $1,001.
Yeah.
So you need to look at
I think one of your
profit.
posts, you talked about this. You call top line vanity metric and you call bottom line a sanity metric. I think that's what you call it.
Yeah. Because you need to know, when I have a client call or an initial consultation and I'm talking to them and it's a law firm and I ask them what their profit, like their net profit percentage or whatever it was for the year before. If they tell me like their profit's at 5%, there's a problem. Like there's a big problem. Yeah. Law firms should not run at a 5% profit. You've got people issue, you've got too many people, your revenue needs to increase, or your expenses are out of control, which can happen very easily in this day and age because everybody sees like softwares and the new shiny thing. And so they buy all the things and then their costs are way high. But so as a law firm owner, your profit should not be 5%. So I know something's wrong.
So from an actual percent basis, your targeting is 20. When you say firms, I guess that would be called the whole owner's benefit if it's on a smaller law firm, right? Okay.
Yeah.
So what are you saying? So 2 questions here, then we'll conclude. But what are you saying is the typical net profit for family law firms?
I'm seeing like 15% profit margin to 20%, especially with firms like family law firms and estate planning and things like that, as long as the costs are being controlled. And so it's doable, and that's where it should be, especially as you're growing. Does that include
owners who are working the firm too, or
no? If you had owner's pay in there, I think you'd be on the like closer to the 10-15%. Whereas if you're not including it, then you should definitely be over the 20% if you're not including your owner's pay.
Yeah. Okay. Yeah, that makes sense. And then collection rates. What are you saying are good? Good collection is 100. But like, what's typical?
Man, it really depends. I don't have a lot of people that are doing hourly billing anymore. They're getting the flat fee, initial payments. I only have a couple that are on hourly billing, and most of them are doing pretty good, collecting at a higher rate, like 80-90%. I like to see them done within the 10 days. Like, I don't want to invoice sitting out, in 30 days. But yeah, most of the people I'm working with right now are on a flat fee or contingency fee for that, or they are like the one family law firm I work with a lot. She collects retainers and everything's on a retainer. And so she doesn't have a lot of outstanding collections just because she's keeping a lot in the trust account.
Yeah, that makes sense. Well, good. Leah, this has been terrific today. I've enjoyed it. A lot of fun asking these questions because I love getting a whole second opinion on stuff that we're doing. So thank you for coming on the show. And now, how would someone get a hold of you and find you and connect with you? And what would that look like for them? Can you talk a little bit to that?
So I post on LinkedIn almost every single day. I've pulled back a little bit, but I post tips, tricks, all kinds of stuff on LinkedIn almost every single day. I love connecting with people on LinkedIn. So if you look for me on there. How to not pay your
taxes too? You have those kind of tips in there?
No. Here's the thing, real quick, on the write-offs and the not paying taxes. If you write off too much or you put too much through your business and it looks like your business isn't making any money and you want to go buy a house, you're going to have some problems. So you got to watch out how much you're writing off. So I'm on LinkedIn just about every single day. Leah Miller, MBA on there. And then my website is lnmfinancial.com. I offer a free 30-minute consultation just to see how I can help you. Even if you don't think your firm is big enough for CFO services, I would love to talk to you about how my firm can help with your bookkeeping so that you can use that financial data to make the decisions that we do with the CFO services. So that's how you can find me.
Excellent. That's great. Well, enjoy watching you on LinkedIn. Look forward to seeing more of your posts and learning more stuff from you.
Awesome. Thank you so much. This was great.
Oh, thank you.